Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. Well, yesterday was quite the day, and I'm expecting that we could see some more craziness today. So if we come over here and look at things, by the way, I'm sorry, I forgot to list the stream, so there's nobody watching right now, but I'm sure that everybody will filter in pretty quickly. Liquidity is just non-existent. Yesterday, we were below 1,000 DAT points. Their market makers are still refusing to put liquidity up. And this seems to be screwing with a lot of market algorithms. And yesterday we had that kind of like big fake news came in where they said that they were delaying the tariffs. And then the White House said, no, that's not happening. That got exacerbated by the low liquidity, although I'm still kind of unsure about how that all started, just because it seems like that the headline had been out there and been there for several minutes before anybody knew what was going on, so I don't see how that could have triggered that much volume. But it might have been an endogenous event, and that is just kind of getting the blame. I don't know. Let's come into the charts and see where we're at this morning. Morning word. Okay, so here you can see the treasuries came down big time after that event. That event was kind of all in through here. And then all through this and kind of later market hours, the treasuries just came down big time and are actually below where they were on Friday, which I find extremely surprising. And that brings interest rates back to like 4.229 when we were at 4% before. So that's like a 22 basis point increase. Yeah. That's pretty big. And when you look at the larger kind of picture, right, we are still quite a bit lower than we were like before the election. So interest rates really not going the way that we want. S&P 500, here you can see pretty good recovery. But I'm a little bit concerned that this is kind of like, okay, this will give them a little bit of room to breathe, but I really don't think that this thing is over. China is going to do retaliatory tariffs. They're not going to play. This is going to get ugly. Oil, here you see oil, just a precipitous decline over the past few days. I mean, man. But yesterday, quite a bit of volatility over here. Gold and silver still kind of, So it's still kind of like sell all the things. I like sell all the things except for the ES, but that's probably just like cover your shorts, right? All right. Here's the Japanese yen. It also coming back with the treasuries and the dollar. A little bit of strength, but we're still at 102.44. Just keep in mind, like, historically, 100 is relatively high for the dollar. So we're still not even below 100. Bitcoin maybe a little bit of a recovery, but they're still below 80,000. Okay, so let's make sure that we turn on. Oh, actually, I think I might want to change some settings here. Let's just double check here. Edit strategy. I think that for reward factor, I have 0.5, but I think I'm going to go for just 1-for-1. Equal risk reward. I don't think that will perform as well, but I think it will be a little bit more realistic. So let's go with that. second thing I need to do, make sure that our streaming is on. Okay, that's good. Or rather, the news squawk. Also, I want to make sure. Okay, and it looks like we are outputting. Oh, except for that, it's not outputting my charts. Hold on, filters, chart. Record mode. Oh, what do I need to set it to? Record mode always. Okay. Forward mode always. Oops. Okay, now it started. So we had all that craziness yesterday, and I was like, maybe we can make a video out of it, and it had not recorded everything correctly because the version of the plugin that I was using was not compatible with the newest version of OBS. So fix that. We should get good recordings today. Unfortunately, we might not get as much action. I guess we'll see. Well, on the docket for today, do we have any major releases or anything? Doesn't look like we do. It looks like it is a no news Tuesday. Got to be careful about those because those can be super, super boring, but they can also be increased volatility. I'm kind of leaning on it might be a little boring though. Well, no, I mean, there's definitely going to be moves today. And I think that we're pretty likely to get, like breaking headlines. Pretty likely to get breaking headlines. Yeah, man. There's a new version of OBS that has different theme, and it is a little bit disorienting to me for some reason. I wonder, can you turn off the whole like seeing people on the side thing? 'Cause I don't really use that very often. Appearance. And we'll look at Discord. Oh, there it is. Very good. Okay, let's see here. So some of the numbers and stuff that I was seeing from yesterday said that this was the biggest divergence between liquidity and volume ever. Like it was one of the highest volume days ever, and it was one of the lowest liquidity days ever. And so we are essentially experiencing a second quant crash. This is what happened in what was it, February of 2018? Was we had a spike in volatility and all of the market makers disappeared. So, and a lot of big quant firms went out of business from that. I kind of think that we might be experiencing the same thing. That you had like a bunch of people, they were coming in and going short off of all of this, and that kind of like screwed them all over. So I am kind of seeing this as a possible like okay, so like we have liquidity holes, right? But after about 45 minutes that liquidity hole recovers. But could you see a liquidity hole on the longer time frame? That the market makers, they pulled back from providing liquidity in this location, and now it will be several days for the liquidity to recover, and that could limit volatility in this area. So like the play would be like buy strangles or something like that. Kind of wondering if I should turn the fan on. It is definitely not cool in here today. I feel like it keeps getting worse. I don't know what's with that. These robots that come in and try and spam people aren't very bright. Yeah, I should check. I'm wondering if my robot is working correctly, because I haven't seen it ban anybody for those reasons for a bit. That's not looking good. It's not connecting. Timed out. I'm going to try restarting my switch here to start, and the other machine must just be dead. I tell you what, it feels pretty eerie with the market being as quiet as it is after yesterday. Why don't you use Jigsaw 5? I will wait for it to be out of beta. They did have a new version a few days ago. Was it last week? Oh no, last one I see was March 18th. 6th beta, 28th of March. And they're still making a lot of fixes too. Wondering if should I read this little jump up to more of the open price as a significant move? I don't know. Checking my email and I got like a, thank you for applying email. And it's like, we'll get back to candidates within 3 to 4 weeks. What? They've been saying for 2 weeks that the final version will come next week. I think it's going to continue to be a while. Having extremely stable software is a competing goal with having new features. So okay, let's see if I can get in now. Still no, but I can switch over here. It looks like maybe no signal. There we go. Can we? Well, I don't. Why would you want the cost base? I feel like that the cost basis indicator is probably going to be less useful in high liquidity. Well, let's see. Yesterday, this was yesterday, right? Yeah, 7. We had this just insane drop and then push back up. And it did go right to the cost basis line. What the F? That's crazy. You can see here, though. Well, that's actually really interesting. That market maker was kind of like at its losing point. So when this happened, it really had to like bail. That's crazy. But I can't believe that it came back to that line. I mean, why do I doubt it? Why do I still doubt it? it happens like every time. I don't know. It's so weird because it's like there's kind of things about like you don't know when it's going to happen. You know, so like trying to create an algorithmic setup for it didn't work. But there's definitely something going on. I mean, it comes to that line. Hard bounce off of that line every freaking time. Replace your dollar chart with that. Well, I kind of feel like that, well, there was this whole thing about like we should be streaming in the $3 Discord, huh? So I should do that. Where are we over here? Share your screen. There we go. So
Order submitted.
Oh. What's with that? I have, by the way, so it's kind of weird that it didn't calculate the historical data here and that it's not loading the historical data going back. So I don't know what that's about. So yesterday I was doing a backtest. Let me maybe pull that up. There was kind of something going on that was making me question the backtest results again. What was this one right here? So I told it just backtest yesterday. Let's have it run. Let's rerun it. Okay, that's maybe a little different chart. Oh. Okay. So yesterday we took like 4 trades and it was 4 for 4. After the stream, it took another one and that one stopped out. So it lost basically half of the profits. But it seems that when I've been trying to backtest it like during the time that it's not, or and this I don't know, did we forget to start it and we didn't catch this one? I kind of wonder about that one. That's weird. Why would that? Oh, maybe it just needs more volatility than 12. Probably even if we had it more than 12. Like, let's change it to 16 and run that. It's probably still fine. Yeah. It looks like, though, with that initial trade that it doesn't make much. That's interesting. Oh, over here. Trades. Yeah. See, we only saw this whole bit right here, where it basically made 20 ticks. And yeah, interesting. Although I do think that we took another trade more than that. But what it is with... Let's see here. So here I have market order imbalance on a 1 minute chart, a 30-minute imbalance. This one is doing a 10-minute imbalance. Oh, wait, what could that be? No. I hope not. I hope that I don't have them conflicting. Okay, wait. First thing. Let's pull up the editor here. Simple market imbalance. Period. It's 10. Yeah, it is. Okay. And if I come into saved, oh, no. I have a... I have a GUID assigned to this one, it looks like. Looks like I am using the GUID one. Okay. Well, okay. So I turned off some of the logging. It might have been telling me some logging stuff that might explain why this chart didn't load the historical value. So I'm a little bit skeptical about the value that is getting there. Because, like, I have tick replay turned on and everything, but it's not reconstructing the past value. So it's taking a trade, and it wasn't like that yesterday, right? So we'll see if it does it again tomorrow. But I don't want to debug it. I want to just continue to let it run. And it does seem like a long is okay here too. So it's just that it was kind of coming from like way up here and came down, and yeah, I don't know. It has been more than 10 minutes too, so I think that is a legit entry. So we just let it do its thing. And I need to not cover things up. So by the way, I wasn't probably not 100% clear. We have in the video description a paid Discord. It is $3 a month. And I am on the paid Discord streaming the second screen so that you can see where the cost basis is. Because I kind of want people, you know, I really want people to buy the suite, get it in NinjaTrader, right? But I know that some of you guys can't use NinjaTrader. So for those, you can do the Discord. You can get it through the Discord. And it looks like Octavius is over there, so he was the main one that wanted to look at it, so. Okay, oh yes, that's right. I was trying to figure out what's going on with my other machine. I wonder if it's just hosed. No, maybe the IP address got changed somehow. But if it's that, I should be able to control 2 with the KVM and see the other screen. Well, before it wasn't switching over. Now it switches over, but it says no signal. I'm going to go and check the connections. Oh, what's my new squawk saying here? Oh, Trump is tweeting it back, apparently. I had a great call with the acting president of South Korea. We talked about their tremendous and unsustainable surplus, tariff, shipbuilding, large-scale purchase of U.S. LNG, their joint venture in the Alaska pipeline, and payment for big-time military protection we provide South Korea. They began these military payments during my first term, billions of dollars, but sleepy Joe Biden, for reasons unknown, terminated the deal. That was a shocker to all. In any event, we have the confines. Oops, sorry. In any event, we have the confines and probability of a great deal for both countries. Their top team is on a plane heading to the U.S. Things are looking good. We are likewise dealing with many other countries, all of whom want to make a deal with the United States. Like with South Korea, we are bringing up other subjects that are not covered by trade and tariffs and getting them negotiated. Also, one-stop shopping is a beautiful and efficient process. China also wants to make a deal badly, but they don't know how to get it started. We are waiting for their call. It will happen. God bless the USA. Okay, that's not. I don't think that that's.
Order
that
canceled.
second part is necessarily a good sign. Okay, so the trade stopped out. That's good. Oh, no. Actually, it's flipping. It flipped. Okay. This is the first time I've seen it flip, so that's good. So there was some stuff in the back of the machine unplugged, but it's still not giving me anything. Probably screwing up the stream. Well. Curious. Where did Inusha go? Let's get rid of that. When 50 keeps reloading. There's definitely some volume trading there. I guess I'm gonna have to fix it after the stream, but I wonder if that other machine has died or something. 'Cause it's just trying to SSH into it is not working. And I'm not getting anything from the display. I didn't have it plugged into the right one, but even after plugging into the right one, I'll try one more time. Nothing. No signal. Let's see if it gives me a signal if I restart it. No. Oh, there it is. I'm getting the boot. Gonna boot into Arch. Okay. Okay. It is running. Can I SSH into it now? Aha. I don't remember the password to the machine. Got in at 16. And it's looking for 12 ticks, right? No, 14. No, 12. So it's still got a bit to go before it would take profit. Oh, was that not even on the right one? Okay, hold on. What a beautiful day. Like not even, well, actually it is, sun is up now. I think we're good there. Might be hard for it to get the 12 right away. I feel like that was a pretty measured and organized reaction to Donald Trump's tweets, don't you think? Like, hmm. Almost there. Or was I using putty to get into the rings? No. Okay, so we've traded 10.
Target filled.
Is it going to make it? Okay. I was wondering if it was going to force it to trade 09.5 before the sim would say that it's filled, but actually it just needed to clear 10. So it's pretty good. It seems to me that on the backtester that there can be some situations where there's like, it's unrealistic fill. Like it would have been 1 tick difference. But when it's live, it looks very, very realistic to me. What is with my... Oh, I did that wrong. I'm sorry. That was probably weird. How long was it like that for? Good grief. Man, it's really going. So if I had not made that change that was like switch around, would it be taking it the no? So there one of the issues that I saw there was like if you had targets, it would take the target and then it would immediately take it again. So I fixed that. It does kind of seem to me that the algorithm is performing better when I'm running it live than when I'm doing the back test. And I think that is because a lot of the losers tend to be the first or last trade. So that's kind of weird. So like the one where, because it can trade 30 minutes after we end the stream. So there's that. And then, you know, a lot of the time there's one like at the very beginning and we just hadn't turned it on yet. This is a pretty big iceberg there at 09. So one of the things I was thinking about yesterday with all this tariff stuff was like, I think that it was the Secretary of the Treasury Secretary was saying like, well, now there has to be negotiations, and that negotiations will probably take longer than when it would. And that's interesting. I don't like that trade, but we'll let it do its thing. Anyways, So it kind of sounded like the tariffs are going to go into place anyways, and then they're going to could be negotiating for months while the tariffs are on. So I was kind of wondering off of that, maybe negotiations with a tariff is not as good news as it would seem, but I think that most of what the market is doing is mostly based on sentiment and so forth first. So in the short term, it's not going to matter. But in the long term, it could, you know. I'm really frustrated that I cannot remember the password into my server now. I tried like all of everything that I would have chosen to put it as. So I can't. Yeah, see, I don't like that trade at all. It's immediately popping back up. And it was only below the 47, like very, very briefly too, as they were filling that iceberg. So it got suckered into an iceberg. So I was wondering, maybe in terms of like how we deal with exits and things like that, that we could use cumulative delta. Like at the moment that it takes a trade, look at what cumulative delta is. And then, you know, if it's gone so much in cumulative delta against the trade, get out. You know what I mean? Granted, I don't know if that would be helping us in this case, because I would think that I could be like, if it's gone 10,000 contracts against us, but it's not 10,000 contracts against us yet. But I don't like that trade. It looks like it an iceberg kind of suckered it in. I'm a little bit weirded out that that was enough to trigger it in again. On the other hand, like most of the trades that it's been taking, I've kind of been like, I don't know if I like that. Know what I mean? I guess another thought is I could be like, you know, like this one right here. There's not that much of a trend. Should it just be R squared. There we go. For it to be like, okay, there's not enough of a trend, so there could still be some left. Versus this one, it's already too far. Let's try it.
Order canceled.
It looks like it stopped out there. Hey. Okay, well that's not terrible. Oh, it didn't like that. What's with that? Oh, I totally crashed Ninja Trader backtesting. Whoa. That's interesting, isn't it? That's never happened before. Unhandled exception. Kind of curious the Treasury is retracing this in this way. And the S&P 500 kind of selling off on the open. Get that big screwed up candle again. I wonder what causes that. Still loading. My E-mini 5-minute chart is not loading. I wonder, so if we open the strategy analyzer now. So it's saying something about this strategy analyzer strategy logger through an exception. The type initializer. Reading the DOM and placing a trade is a definite. I worked pretty well yesterday, man. Maybe you just don't know what you're looking at. It sounds like an Amanesh skill issue. Ninja Trader's still doing some weird things here. Wait, what? Did it just close my... Oh, what chart is it? I think it did. Something's very, very wrong with my Ninja Trader. April one day. Well, it's been back tested over 3 months. Been doing it for a while. But there's also a couple of studies I can show you, right? Like there was this study we talked about where they took the changes on the DOM and fed them into a large language model, and they found highly predictive short-term signals. Right? There was that one. There is, we know that a lot of market-making robots are utilizing market depth information as the primary basis for their trading. So we have a lot of reasons to believe that there is edge in being able to read and understand market depth. Or let's call it order flow in general. Yeah, I clicked tried to close that workspace, and now it's hanging on me. What did I do to NinjaTrader? It's got to be a Seth problem, right? He does look at charts. That's the funny thing is he has this unwavering belief in something that has absolutely no evidence. That pretty much all the evidence that we have kind of suggests that it's a terrible way to try and trade. I mean, in trading, there's always going to be this leap of faith point, right? Where the rubber meets the road, and you can't guarantee that it's going to work the way that you think it is, right? But the question is, how much of a leap of faith are you making? And when you're going into these price action strategies, I really think that you're really going crazy. Like, okay, wait, what's it? Can't find part of the path. Where is it looking for it here? Documents, NinjaTrader 8. It wants there was never a strategy analyzer logs folder. Why is it looking for that? I guess I could make it. Amanesh, if you want to come and troll this stream, you're going to have to come up with better arguments than that, man. Oh, you've never seen one. Okay. I don't think that you've seen a whole lot. Actually, maybe it is an effective troll, because what he's saying there really, really bothers me, because you really cannot tell how effective a trader is just from watching them. Humans are really, really bad at being able to judge the performance of something just from watching it. That's how we have a lot of retail traders out there that are absolutely terrible traders, and they're able to develop huge followings. Nah, you've been here longer than 3 weeks. So it's the same troll that we've banned a couple of times now. Listen, if you don't believe in what we're doing, if you don't believe the empirical evidence that we have, and you want to go and trade price action or some other bullshit that you learned from somebody on YouTube that has absolutely nothing to back up what they're saying, then go somewhere else. I really have no problem. I don't need you here, right? All you're doing is harming other people, distracting the stream, and you're not adding anything. There's some trading documentaries on YouTube too. Like it is the other thing that I think is kind of funny is that when I worked at the bank, they didn't have charts on their screen. Like they were using the DOM almost exclusively. You stated numerous times if you had empirical evidence, you'd start a fund. Well, so we're talking about you're conflating different things now, right? So you're saying that is there empirical evidence that the whole strategy works, right? So there is not empirical evidence that the way that Seth trades is a profitable way of trading, right? It that kind of like by definition of empirical evidence, that's kind of an oxymoron, right? Because Seth's experience would be anecdotal anyways, right? Now, there's also a lot of reasons why it's very difficult for us to collect all of the data necessary for us to really provide solid empirical evidence about particular, like a specific strategy. But we have very, very good empirical evidence about different stylized behaviors in the markets that you can see in the order flow, right? And you don't have that with price. With price, all of the empirical evidence is that prices are essentially martingales. Right. So we're talking about like what is the empirical evidence that we have about the market? And then there's what empirical evidence do we have about different strategies? So for instance, there is empirical evidence that the momentum portfolio is has a history of performance. Can never say that it's always going to be profitable or anything like that. But momentum portfolios have worked in the past. They have a pretty good track record, right? Okay. Do we have empirical evidence of Seth's strategy? No, because it's not backtestable. Well, we're doing everything that we can to get it as close as we can to that. But there are some elements that we can't programatize yet, right? Versus, I don't know, how does Amanesh trade based off of price action or something like that? And it's probably a really set sort of setup. I can go and I can test that setup, see what that shows, and then you're going to come through and it's not going to see anything. And you're going to still say that it works. Like, it's just... So don't come in here and be like, try and fight me on empirical evidence when the whole basis of your trading and your argument is ignoring the empirical evidence and doing things that pretty much directly contradict the empirical evidence, you know? Oh, you know what happens I think that NinjaTrader, when it crashed, because it like deleted all my, okay, so the strategy analyzer logs, maybe that is a folder that just disappeared because it wasn't there. I created it, and now there's the log is empty. So all of that, I mean, I guess it's okay. It's not the end of the world, but it kind of sucks that I lost all that, because there was some useful information that I had saved in that. Where is my recycling bin? I can check in there and see if it ended up in the recycling bin. Oh, look, there they all are. What happened? Did I somehow accidentally delete them? How did that happen? Restore. It's possible that I did it somehow. Let's try reopening the strategy analyzer. See if it loads it correctly now. Ha. Okay, it's all back. You're explaining this to him with the fifth. I know, he it's kind of funny that he thinks that we don't realize what's going on and believe that he's really only been here for... No, I am not using the latest version of NinjaTrader. I'm still on the 8.0 branch. And I don't know if I'll ever go, well, maybe we can go to the A1. I could, I'm thinking about like switching over to, data provider and all these sorts of things. And then that would maybe allow me to use a newer version. I don't know. I have to see. I have to see how it turns out. Or if NinjaTrader brokerage could just get Rhythmic data. Okay, you never... Well, I don't think I have you... Amanesh, just straight up, I'm telling you, I think that you are somebody that's been trolling us for a long time. You show all of the characteristics. You showed up at the right time and all of this sort of stuff. So if you were just happened to randomly come on here and were wrong, then I apologize, but I'm pretty damn sure that you're just the same person. And trying to like play off like you're not is, I think, really funny. Nobody in chat is fooled. Everybody can see right through it. This is like the way that you talk, the arguments that you make. It's all very characteristic and people can see it very, very easily. Okay, so, oh, that's interesting. I restored it, but it didn't restore everything. Yeah, oh sure, 50 different people came in all arguing the same thing. Okay, so you lay claims of empirical evidence, but apparently none of it leading to documented profitable trading strategy. Okay, so we can have documented empirical behaviors of the market. Does that necessarily result in a profitable strategy? No, then you're correct. Does not necessarily result in a profitable strategy. And the thing is, I think you're kind of you're starting to go into a fallacious argument though, because you're saying, well, I made money with it or something like that. Well, I mean, I've done pretty well, especially the past year or two, but that's anecdotal, right? So empirical would be like, well, one, if we can systematize it, right? If we can systematize it, then you can just show the historical performance of that. That's one thing. Okay. Now, because of the type of data that we're using, and the fact that the news and the sentiment and our reading of the markets is a very, very critical factor in the strategy, that's not easy for us to backtest now. I'm not going to say it's impossible to backtest, because I do kind of think that you can utilize the LLMs to do that part and show profitability that way. But that's hard to backtest, you know? Okay, versus some other things, like if your strategy is completely mechanical and you're primarily using price, then you should be able to show something in that should be systematizable. That should be, you should be able to turn that and like turn it into a backtest, right? But there's the other thing, which is like, okay, so for the way that we trade, because there's a lot of discretion led up, up to the individual. What we could do is we could take like 100 traders, let's say 200 traders, and let's have 100 of those traders watch my stream and learn how to trade from me, and we'll have 100 traders watch you and learn how to trade from you, and then watch their performance over a 2-year time period. Let's just say 2 years. I don't know if for a study like that you'd be able to get 2 years, and a lot of people would give up before 2 years, right? But let's say 1 or 2 years and see how they perform. And I bet you that my group of traders would perform better. And then that would be like an empirical study, right? But there, you see there's limitations on the being able to empirically prove when we're talking about like the actual strategy. But what we can do is we can look at, what do we know about the market, right? What can we prove about the market? And are there inefficiencies in the market that we can potentially take advantage of? And I can't guarantee that you'll be able to take advantage of it, or that you'll find a way to take advantage of it. But at least you have like something about the markets that you can run with, right? You got to have like a foundation for your trade. What good is it? Well, listen, if you don't want to understand the markets, and then why are you telling me? Okay, so like I really don't think that this is the own that you think it is, Amanesh. It's like, okay, Seth has a bunch of empirical information that he can present to you about the markets. Amanesh has absolutely none. Ergo, like, what? Okay, anyways. If you don't want to talk about empirical proven information about the markets, then go somewhere else. I don't care. But you don't have to base your trading on empirical information. Okay, let's see if we can get that to run now. Better. Okay, that looks correct. After the 1 day of trading. The one thing I don't get is, when you're looking at this, is, again, our trading did not match the backtest. Like, our live trading was really good. And the backtest says that it was vel. So, like, a few little trades. I don't know. It's like 1 or 2 trades on each one of these days results in, like, there were different results in losses those days, even though for us yeah. So I don't know what that's about. But anyways, what was I doing? Oh yeah. Okay. Man, I can't believe that NinjaTrader crashed like that and like hosed the whole directory. That was a weird bug. I think that we just came across a really weird bug. Multimodal. There was somebody who was coming in here was asking me about a strategy. I haven't heard from them in a few days, or a few weeks. So I don't know what happened to that. I actually kind of wish AO hadn't banned it because I wouldn't understand where it was trying to go with it. Like, I just don't. I guess the thing is that I can't guarantee to anybody that having empirical information about the market is going to make them a profitable trader, right? Like, the way that things work, most people are still going to lose no matter what, no matter how great the information you have. So you have the cost basis indicator on the 5. I do. Oh yeah, sorry. Let me minimize the. Oh yeah. So here again, we're kind of in this thing where, like, because of everything else that's going on, I don't know if that it's as useful as it normally would be, because like the cost basis lines are super tight, right? Yeah. I find that the 10-year does pretty good. Like it always seems to be in line. But then like ZF or ZB, like only one of those will actually be good. And the other one will be like way off kilter. Because, and I assume that that's because of spread trades. So it's like a smaller percentage of the volume in the 10-year is from spread trading. I believe theory, but okay. AO did unban him. I bet he probably is going and trying to create new accounts though. Okay. You can't. Empirical evidence is your way out of risk exposure. There will always be risk. Well, so generally speaking, though, like when you see retail traders and it seems like they've made a lot of money, that has been primarily a factor of risk and not alpha, right? I would hope that you're trying to create alpha. Now, am I too timid with my trading? Well, I don't think so. I think that one of the major reasons why retail traders lose is because they take too much risk. So this kind of comes back to the thing where it's like, okay, if I back test, if I create a completely random strategy and I run it 1,000 times, and actually you'll get like after a year, 400 will be profitable after that, right? Well, if I kind of change some things and allow them to take on more risk, kind of we'll change that distribution a little bit. But why 1 year? Well, 1 year is basically 250 trades. It takes one trade every day. So if I do it over 5 years, then it like the percentages just start to plummet. So what if I allowed them to trade like 12 times a day, right? Well, then you would see that like hardly anybody survives, right? So like they're over trading, or they're taking too much risk on position. Because this is the other thing, is it only holds them for like 30 minutes, right? So you could increase the amount of time that it holds it, and that exposes the model to more risk, and then you would probably see more people that have also blown out because of that. So an interesting thing about it was like, wait, do I have the? Let me just pull it up in RStudio. Now let's do this one. Had a little hiccup on the data. So you get this little bump right here, right? These are the people that stopped out. These are the people that stopped out. So you kind of get this kind of skewed distribution that's skewed towards people failing, right? But if you don't give them an account size, don't give them any kind of like risk parameters whatsoever, then you get a Gaussian distribution that looks more like this, right? So that's funny that he even remembers the name tilt. That doesn't convince anybody, Amanesh, that you remember that it was tilt. Oh man. I can't get over the number of things that he says that just seem like low IQ things to me. But I digress. Okay, anyways. So basically, if you don't have alpha, then the more that you trade, the faster that you're going to blow out, essentially, right? And the more risk that you're taking on. Now, there's this whole thing that's kind of like, if you take on a lot of risk relative to your targets, that like you can kind of get away with that for a while, right? So, but generally speaking, what I find is that most retail traders, the amount of risk that they're taking on with futures is so high that even if they had a profitable strategy, that they wouldn't be able to handle the drawdown on it. It's like they have a strategy that if you were really trading appropriate size, you would maybe have a 10 or 20% drawdown on it. I mean, come on, with stocks, this is a 10% drawdown just with stocks overall. So can you really expect your drawdowns to be less than that? You're trading futures. It's kind of crazy that when you put it in those kinds of terms, right? But then, you get yourself in this spot where even just trading one contract, the drawdown on that is going to end up being like $10,000 or something. And most retail accounts can't handle that. So what does that mean? That means most retail traders should trade less and they should trade smaller. And yeah, that means you can trade micros. Why not? No threshold. Okay, I think this should work. So coming over here. I'm gonna keep this over on this screen just so that we don't cover up the order flow. Well, that's interesting. It sure filtered out a lot of trades. Sure filtered out a lot of trades. On this right here, hold on, like, columns analysis, columns log. That actually increased MAE? No. 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 I don't think it helped. I don't think it helped, guys. But let's do a little bit of optimization just to be sure. So Uzi has a theory about who Tilt really is, and I see a lot of things that really work in favor of his theory. But the thing that I can't seem to get away from is that Tilt seems to have some sort of like clinical disorder of some sort, I think. I just see arguments and the things that he even like, not just what his argument is, but like what he chooses to be his argument. Does that make sense? So like there's you have logic and the logic is flawed, right? But then there is why did you choose that particular thing? Why did you choose that line of argumentation? You know? And it just doesn't seem to line up with Uzi's theory. So it kind of makes me think that it's another, but you say that it's a long old grudge, and so then I have like an alternative theory about who it is now. And primarily because of like the things that they say, because it's like seems like they kind of say narcissistic things, and that alone should probably key a lot of you guys into who I think it is. But so like maybe Seth is too timid, but that's okay. Whatever, doesn't matter. He seems to maybe be somebody that maybe they had some degree of success from taking on a lot of risk. But I don't know. But then the other thing is that the person that I'm thinking of, I know you're socially awkward, so you might not quite understand that that's a telltale sign of someone who's known you for a while. Well, right, but okay, so here's a question, Uzi. If we could prove that it's not your number one suspect, then who would be suspects like 2 through 5? You can like tell me in private message. Who do you think are suspects 2 through 5? So the deviation trigger is supposed to be 3. I like changed all the settings here when I tried to change it to optimization. So okay, so I'm gonna go from like 5 to 120. 5 5s. Okay, let's see here. You had some thoughts on people that I didn't think of. I forgot about that one. I was trying to remember, who was this one? Was that his name? I can't. You don't remember who? Uzi can't remember his name either. That's funny. It's still going. It's still going. You know, like we did have a little bit of news headlines today, but it kind of feels to me that like it's just not. It's kind of ignoring. The flows today are just like seem to be unaffected. I think that some of my NinjaTrader charts are maybe screwed up. But the backtester is still working, so it's like that's my last bar is 808, so it hasn't been printing bars for 10-15 minutes. Oh, it actually came out with some that were, wow, not only that were really good, but that had insane sharp ratios too. How is that? How is that possible? I'm a little bit shocked. Huh. Okay, so it seems to prefer a 30-minute period. And what does it prefer for the threshold? Well, that's interesting. Okay. I like that, actually. So do you guys see what it's saying? Okay, so obviously there's a distribution. But, well, and I'm sorry, there's those like dark blue, so it might be kind of hard to see. But there's kind of this thing that's saying, okay, if I limit my trades to only when the R threshold is below a low number. So I started with 80. I started with 80%, and I was getting these ones, and it's like, no, those ones don't work. But then if I say it has to be a really, really low one, then it's better. Because basically what it's saying is only take a trade when a trend is starting, not when you're already really far along in the trend. So if I change this so that we get a 3-dimensional one, where's our period? There it is. Okay, so that diagram, that distribution is a little bit disconcerting to me. Like it kind of makes me wonder if the period really makes sense. But there is a very clear spike at 30 minutes and what's this other one? 90 minutes. So, and this one I think is going to be, oh no, this one is actually our period of 85 and our threshold of 0.1. What? Okay. By the way, it's optimized on profit factor. But some of these made a lot more because it traded more. So I would kind of, oh, and the percent profitable. That's, wait, how many did it do? I think I want more than 10. I want more than the 10, but what was this one? Our period of 30, our threshold of spot 2. That seems to fit. And that one is the most. So that's a result that would kind of make me think like, is it, are you curve fitting? You know what I mean? Also very interesting. 30 and 0.2. And if I change that to 0.3, it's less. Takes more trades though. So you don't really have a super huge sample size, unfortunately. But those numbers seem to make sense to me. When I do market maker replay in Denali, I don't get MBO data. What program should I use to record my screen? OBS. OBS. Okay, so coming back to here. Oh, it's not, didn't save history. Of course not. Default is to not save history. Oh my. Interesting. Well, wait a second. Oh, it didn't take trades in during that crazy time period. That's interesting. Hey, wait, I thought I turned on MAE, MFE. Oh, you know what? I did, but I didn't save it. Okay, log MAE, MFE, reset, save. Okay. See, well, it's I don't so what's happening is I'm telling it like, don't take a trade unless we already have, or sorry, don't take a trade if we already have a lot of trend coming into it. Okay, so it has to be a situation where there's a pretty good impulse and there's not already a whole lot of existing trend, right? And that turns into like, okay, well, you start earlier in the trend, so it can go more in your favor. But what I'm trying to avoid is when you get in a trade and it just like immediately starts going against you, right? And in other words, I am trying to minimize the MAE, and it is not helping. It's the reason that these results are better is because the MFE is higher, not because the MAE is lower. So if I came back to the analyzer here, and instead of maximizing it on profit factor, I did min average adverse excursion. What does that result? Well, now I don't even know what Amanish is even talking about now. Unless I'm willing to potentially sit through massive prolonged drawdown, I don't have or have the account size to do it. That data isn't helping me. Okay, so then, okay. Is it trying? I would say it is trying to catch the beginning of any leg. Is the way that I would put it. Maybe we're catching something where what we should actually be doing is like take the filter off and just record what the R squared was when the robot took every trade, and then plot out the R squared based on whether the trade was profitable or not, and see if there is a relationship there that's worth taking. Because there could be, it could be something like maybe it's only worth taking when it's between 0.2 and 0.4 or something like that, right? Or rather, you've got this whole field of things, and I'm saying, let's only take these ones. And I've been testing, what if we only take these ones? Or what if we only take these ones? But what if it's actually, we only want to take these ones? Then the way that I'm testing it's not going to catch that. What's with the title? Where did you find that? That's just me. So we saw such low liquidity yesterday, and the way that that moved was like super crazy. And now today, it's like relatively calm. I think that we saw a second quant crunch. That basically, like, there was a lot of algorithms like tapping out yesterday. And I think that you're probably gonna find out later that a bunch of like big market makers like straight up went out of business or something. Well, it still prefers the R threshold, but performance. Oh, so for that, it says that they're all one over there on that. That's, I don't know if that's helping us. Let's see, that seems kind of random. Yeah, it went out of business. Well, so in 2018, there was an incident where volatility like expanded significantly. And It was kind of like a lot of people were like, what the F is going on? Because back then it was like just seemed to have come out of nowhere. There wasn't some big headline necessarily. I think that it was maybe actually had something to do with like the repo facility being created and everything, but I digress. I don't remember if it was that, but there was some trigger, but it was kind of something that everybody ignored. And yeah, you just saw like all of the liquidity providers stopped providing liquidity, and treasuries had under 1,000 resting orders at every price. And it was like super, super crazy. And I, you know, for us, we just went on with our thing. I performed really, really well during that period. But I found out later that a ton of quant firms went out of business. And the one that was the most significant that I heard of was that there was a lot of firms that they were doing things where they would have generational algorithms where they had this thing that was like all technical analysis indicators you could ever possibly think of. And then it was running millions of back tests to determine like what was working the best at that time. And then it would trade that. And when the quant crunch came, that whole industry basically went kaput. And I noticed that things kind of felt different after that. That, you know, it really did seem to me like some major players that were maybe affecting patterns in the markets went out of business. So, have you backtested enough strategies that you find all of them are worthless compared to index investing? Oh, that's actually absolutely not true. So that's a funny thing. So in my backtesting, let's do this way. So I don't know how I feel about this. Like it performs a lot better with these settings, so I'm kind of thinking about keeping them, but I don't know about that because I don't want it to not take trades. I think that we'll leave it this one for now. Okay. Yeah, we can do it. No. We have to make it a big one. Big one. So what I find, the primary thing that I find is that price, short-term price, intraday price is practically useless. like if your strategy is based entirely off of doing analysis on price, it's just there's nothing there. There doesn't appear to be any valuable alpha in intraday prices. It's just is and I've done so many back tests. It really is just kind of like it comes down to I mean, I think that there would have to be some really major key that we're missing. But everything that I get through is like the results that you have are mostly a factor of volatility. And that's kind of like if I come into like what we do know, like what is useful information, like what doesn't work. Oh, maybe it's not one. Okay. Number two, how should I word this? So one of the issues that I have, or that happens, is you'll make a statement and people misinterpret it because they don't have all of the context to understand what you're saying correctly. Individual trade management is useless or hurts is how I'd put it. So coming in and saying I'm going to have an 8-tick target and an 8-tick stop, the instant that you put a stop on there, it usually makes the strategy perform worse. Now, like larger scale risk management is useful, right? Like giving yourself a daily loss limit, that really helps. Okay. But like most retail traders think that it's all about managing risk, and so they say, oh well, so I need to pick the right stop, or I need to say like, oh, here's this place based on the last swing that it's not supposed to get to, and I'll stop out if it gets up there. And whatever it is that you do, it just makes the strategy perform worse. That's just the long and short of it. Number 3, rating 1 to 60. Well, let's say 1 to 30 minute charts useless. So like maybe when you get to 30-minute and 1-hour charts, then there are maybe some swing strategies that you can take advantage of. Maybe if you're trading less than a minute, then you're in the world of HFTs, although those are going to be like, you're probably going to be utilizing more order flow, things like that. But generally speaking, just having a strategy that it's going minute by minute doing its calculations, it's really hard to find an edge in that. So there seems to be this chasm where, like, because that's where everybody is trying to play, it's like almost impossible to find an edge on that time frame, right? So those are kind of the things that I keep finding from the back testing. What is useful? Okay. One swing momentum portfolios are a thing. Okay. So if you have a whole universe of assets, and you trade those universe of assets based on that asset trending, like maybe it's broken a new 50-day high or something like that, and you're doing like daily charts, that works. It seems to be cyclical now. It seems like some of the edge is taken off of it, and like it might be cyclical. So how well it does depends on how many momentum portfolio funds are doing it at the time. But okay, swing momentum portfolios are a thing. Okay. 2, managing the risk of an entire portfolio. So you're trading all of these different assets. Each asset you have to determine how to size your position, and sizing your position so that they're all kind of the same. That makes a big difference. And taking like looking at cross asset correlations and saying, well, I already have a position in this and this is too correlated to that, so I don't take a position in this. That helps. That's big time help, right? Number 3 is there are more abnormalities in order flow. So when you look at price, the whatever test that I do on price, it just comes out like a Gaussian distribution, right? Whereas when I do a order flow thing and I collect stats on that, I find a lot of really bizarre things. Sometimes those bizarre things kind of make it harder to trade in some respects, you know? But one of the things that I find the most interesting is that it seems to be streaky. It seems to be streaky. So you'll have some sort of an order flow setup. It'll work perfectly every time, for like 3 days, and then it will fail every time for 3 days. and it kind of goes into these strange, or like if you were to look at whether it's profitable or not, you know, like if you were to graph it, with price you get this, and with order flow you get this. So that's kind of weird. This is where I believe that one of the things in our order flow that we're missing is hidden Markov models. If we can, you know, do some hidden Markov model sort of gaming of it, you might be able to tell which regime it is in, and, you know, keep it so that it just stays up here. They're profitable for the most part. You only get little dips every once in a while. Okay, so like those are the kinds of the things that we find from backtesting. So to the question, you find all of them are worthless compared to index investing. Well, if your comparison is the S&P 500, there are actually a ton of strategies that do it. There are actually a ton of strategies that do it. And so I really strongly disagree with this idea that it's impossible to build an alpha in the markets and everybody should just use index funds. I think that if you're putting a reasonable amount of effort into it, that you can absolutely generate alpha. You can absolutely generate alpha managing a portfolio of stocks. And I've been doing that over the past. I've like almost tripled the return of the S&P 500, and that's without using beta. This is the funny thing is that if you manage your own portfolio, you can outperform the S&P 500 just from utilizing beta. You know, like avoid the industries that aren't doing very well, because there is a correlation between beta and like small cap companies, right? Small cap companies haven't done very well the last 2 years, but you can still find a lot of companies that are not in that segment, but still have high beta, right? And then you would outperform the S&P 500. So indexing, let's call it, indexing makes the most sense for your 401k. Okay? Because of the way that your 401k is structured and what you're going to be using it for, your retirement and things like that, you should put your 401k into an index fund. Okay? And if you're going to do an IRA, maybe you should do that in your IRA too. Or you could like buy Berkshire Hathaway. I have a lot of Berkshire Hathaway. Okay? Because of what you're going to do with it, right? Because indexing basically kind of represents the best risk reward, right? But what can happen is you can come in and you can start to take risks and combine that with alpha generating, and you can outperform the markets. And so once you have those retirement accounts, you can have a, like what we would call a mad money account, where you manage a portfolio of multiple stocks. Maybe you're doing some degree of momentum. Maybe you're just analyzing individual companies and deciding what are good companies and what are bad ones. You can absolutely outperform the market in that respect, right? So, and that's like when you're comparing to index investing. Now, when we come into day trading, it's a different thing. You're not going to perform as well as an index fund that is always invested by only being in the market like 1% of the time. It's just like it's not even going to be anywhere even close. So a day trading strategy is not a what do we call it? A maximum capital gains strategy. I think that's what a lot of people do or think of it as, and that's the way that they treat it. But you're probably doing the wrong thing if you want max capital gains. Okay. So when you're comparing day trading strategies, really you should be looking at, well, first of all, whether it actually even makes money and like what the Sharpe ratio of it is. Because index investing does not have a high Sharpe ratio. But once you get into day trading strategies, that's where you can get Sharpe ratios above 1 and even as high as 3 and 5. Okay. So that's how I would judge a day trading strategy. And it seems to me that the day trading strategies that are available, or sorry, the day trading strategies that we know work are kind of like out of reach for retail traders, is the thing that I've generally found, right? With the one exception being informed. You know stuff about the markets, you take a trade. That works really well. If you're really strict about that, now is probably not the time to trade because of the volatility. You can't guess. They're going to be too fast, but there are some times where you can take advantage of that, and there's some real alpha in that. Okay? So, but that's not backtestable, right? So that's where the issue comes into. So it's, I wouldn't say that the backtesting has found that all strategies are worthless compared to index investing. I'd say I have a lot of evidence to suggest that the efficient market hypothesis is just dead wrong. But what I do find is that if your goal is to make the most amount of money possible, you probably shouldn't day trade. And day trading is really more for people that are looking for like really, really low risk strategies, actually, or that just want to be involved in the market. Being involved in the market is a benefit. Okay, there's a lot of things that you learn. You can kind of use it as a loss leader. Okay, so that is a legitimate reason to day trade. Okay, but if your objective is to like make the most amount of money, day trading futures is probably not the way to do it. Okay, guys, I have to get going. I will see you tomorrow. In the meantime, stay excellent, team.